Testing, testing, testing. JB here. 1 second. Testing, testing. JB here, JB here. March 27, 2024. Not much different. What, is this not going? Why is that not going? Did I do something? Hang on a second. JB here, JB here. Hope everyone's doing outstanding. March 27, 2024. Just going to get on real quick. I haven't talked, not much to talk about different than what I've been ranting over the last 2 days. Obviously, CGC is nice today. 920 right now. Pretty impressive rally considering it already rallied 140% last week. CDLX is bouncing, but the call premiums are not bouncing with it, so that's a little disappointing. Yeah, and go from there. So first I'll talk about Cardlytics, and I did my rant yesterday. Just kind of disappointing for the leadership team, right? The CFO to come out and do 2 offerings back to back. Why not lop them together? Why not just do it all at once? It kind of reeked of not planning for it, right? I mean, obviously, if you're the CFO, you have debt, you have notes out, you have to do things, but how they did it kind of speaks volumes, right? So sold off yesterday, all the way down to 12, started to bounce. Then it closed down, I think 13 and change yesterday, right? 1380, 1360. Bounced today all the way up near 15, and it's just kind of turning around here. I think it heads to $30 in the coming months. I don't think the story has changed much outside of those financial shenanigans. So I was looking at the May 30s. They're actually very inexpensive right now, but I don't want to add anything more just yet until the dust sort of settles. So I'll probably just stand pat on my April strikes, holding freebie 20s, 2250s, and then the 1750s that I added. And then at some point I'll look to get some May strikes and maybe even go out into July. That's CDLX, not much to add on that one. Then CGC. So Germany's approved legalizing marijuana cannabis. That goes in effect April 1st. I think there's a little piece here. Canopy Growth says the market for Germany, we think that the market has the ability to grow 10 times over the next several years. Most of the revenue is going to come through the medical channel, which is where you'll see the commercial benefit for Canopy. They also presented a conference in mid-April. Locked some more strikes in on the April 10s today. Of course, hindsight, I wish I had the rest of my April 8s that I had at 18 cents. Those are over two and change right now. Well, I don't even know what they are right now. Sometimes it's better not to look. 224 by 227s, 237. So over 10 bags. But then I got those May strikes. I just locked some more of those in. Well, some of those in just to cover costs. So now I can ride free because we saw what happened. You had that huge move last week. It gaps higher to start the week. It actually was up in this area right now where it's trading into pre-market Monday, and then gave all those gains back and then some to close down in the 6. I think it hit 5 and change yesterday. So it's going to be a bumpy ride, and it makes it extremely hard to hold a position when you have 100% of the position on, right? It makes it even harder. It's almost like you want to cut your losses. So that's why, especially over the last 5 years or so, I tend to lock profits in at 100% to cover costs and ride the rest. It takes out some of the emotional aspect of trading. And it is with options, right? It's the easy part is entering a contract, right? The hard part is the hold. It reminds me of a Seinfeld episode where Jerry Seinfeld's at the rental counter and he's trying to get his car, and the lady's like, well, we don't have your car. He's like, well, I have a reservation. She's like, oh, well, unfortunately, we don't have it. And he's like, the easy part is taking the reservation. Anybody can just take the reservation. The hard part is holding the reservation. So it's kind of similar with options, especially if you're looking for more than a 100% gain or 200% gain. The hardest part is when it's up 1,000%, the market's closing, it's a Friday, your calls expire next Friday, and you have to make a decision. Is there going to be news out over the weekend? Is the market going to sell off on Monday? Things that all just play in the emotional aspects, and that's why it makes it easier when you lock some in. So I'm not going to fault myself. It could go to $20 next week. That was kind of the plan. That's how I've been trading, so I'm not going to fault myself for missing out on that. But I think it heads double digits. I keep putting on a watch list. I think it trades 17, 18 in the coming weeks. Not sure I'm going to add anything just yet to play for that, anything more, because if it goes up there and I hold the rest of what I have, it's going to be some nice gains. So I'll continue to like that one for upside. And then IIPR. So back when I first started trading, I never knew about the ex-divi date. So when a company has a dividend, and if it's a substantial dividend, the ex-divi date, which today was the ex-divi date for IIPR, and REITs typically have a higher than average dividend, the amount of that dividend comes off the stock price. So you wake up the next day. I'm trying to think. I mean, sometimes the S&P, when they have ex-divi date, it screws up things. But you go and you look, say, why is this stock down $3 today? There's no pre-market volume, there's no news, and then you realize it's ex-divi date. But the option market's pretty smart. It's already priced in this ex-divi, this dividend, and the ex-divi date. So the puts tend to be a lot more expensive, and the calls are less expensive. So it gives almost the illusion that calls are, wow, these are really cheap. And sometimes when they're really cheap, there's a reason. That's because it's ex-divi today. But the calls were actually in the green for most of the morning. Let's see if they traded back up. But I'll continue to hold IIPR because all it's going to take a 2-3% day. Well, they're kind of flat, 60 by 75. So all it's going to take is a 3-4% day next week, and those calls are going to be a double or triple. So I'll continue to hold those, especially if next week you have the news, Germany's, I don't know if there's going to be headlines everywhere that there's the official date of legalized cannabis in Germany. Is that going to set another fire underneath some of these cannabis names? So that's kind of the thought process there. What else do we have on here? IIPR. Oh, so Reddit. Nothing drives me more nuts than when I see some of these fintech companies or whatever come out with short headlines on their tweet or a short piece, and then put in a headline, we see 50% downside. So of course, what happens? Hedgeye did that with Reddit, and I try not to talk bad about people. It's like not a good thing, right? I try not to put other people down. I think to be a respectable human being, putting other people down is probably not the most respectful thing. And if you can sleep at night doing that, there's probably something wrong with you. But Keith, whatever his name is from Hedgeye, he does that he's been doing that for the last 10 years. When I first came to FinTwit, I remember looking at that guy, and he put stuff and trash people, and then he's so arrogant, he thinks his poop don't stink. That's fine, right? I guess that's how you are. I'm my own person. But over the years, they've had some crazy, nasty, like wrong call, Tesla short, Netflix short. But then they'll say they're not short when you call them out on it, and they'll block you or whatever. So, and then during COVID, and UPB used to post some of these pictures. You go on Twitter, and there'd be ads from Hedgeye, and it would say, "We see massive downside to the market." And this is in the midst of the COVID run, when it just started to go. Big bear market. This is a start. There's more selling coming, and then we endured probably the biggest, fastest market rally in recorded history. And then they'll pull those ads, and then the big thing and the sore thumb that I get with a lot of these folks, same with that guy, Ross Gerber from he's a fund manager in California, big Tesla guy. All these people went on FinTwit and said PPP is wrong. You're taking taxpayer money. Hedge funds shouldn't take it. Funds shouldn't take it. And then not only Ross Gerber took it, and he did it on a motorcycle company. And then Hedgeye took it. Hedgeye is a big $1 million company. They got a $50 million grant from Connecticut. I can go on rants for days. So that's why some of this stuff rubs me the wrong way when they try and just do sensational headlines. Reddit just IPO'd. It's going to have, some of these names have IPO smash ups for no other reason than they do. It's happened so many times in the past, and it's going to continue to happen. So at some point, Reddit will come back down to earth. Is it going to go to 100 and then back to earth is down to 70? Is it here and back down to 40? Who knows? But just some of those things rub me the wrong way. So that's Reddit. I'm definitely not a name I'm going to trade in the near future, but it could be a fun one to trade in regards to volatility. So now that the option market's out there for the last couple of days, I might be one just to fiddle on both sides. So it could be a nice lotto one into the end of the week. So I might have that on a watch list for a trade like that, not a long-term hold where I think it's going to the moon. So that's Reddit. VKTX, I get quite a few questions on VKTX. Where do I think it's going? And I looked at that bull flag, and I'm not putting my charts up here, so I apologize. Let's see. It still has a bull flag setup. So, I talked about yesterday, $32.50 is the difference between 35 and 100, which is the start of the gap and the end of the gap when we hit earnings. So then you take a look at the price, and that puts it $32.50 at $82 is a 114, 115. So I still see it as a possibility. And then they're going to have their NASH data. And NASH data is going to be out before the end of the first half. I don't know if I mentioned on a rant yesterday, but it's kind of like their back pocket thing. It's not. I don't even think much of that valuation is baked into VKTX because a lot of folks are just throwing NASH to the sideline because they don't think there's going to be a market for it as GLP-1 kind of replaces that. So we'll have to see how that plays out. Another headline just drives me nuts is when you see folks trying to take advantage, and I've talked about Monday and Tuesday with the lawsuits, trying to take advantage of this GLP-1 boom. You have, I don't know if it's Reuters or Market Watch or someone with a big headline. Wegovy costs $1,000, but it only costs them $5 to produce. It's like, what does that matter? I get it. It's horrible that they're charging, but then people shouldn't pay, or the insurer shouldn't insure it, or whatever. There has to be some give and take here because UPB mentioned it. I think the best is that in order to innovate, there has to be some right? I mean, innovation is not non-for-profit unless someone's a really charitable person, right? There has to be some incentive. And the incentive for drugs is that on the other side, there's going to be a big payday, right? Or you can be famous, whatever that makes people tick. Most times it's compensation, it's money. So to see some of these headlines saying so-and-so drug costs this much to make, what does that, and I use the example with the hospitals, right? If anybody has had a family member or a friend or someone stay in the hospital for 3 days and overnight stays, and you get that bill a couple weeks later, it's like $40,000, and maybe you just got regular procedures, but it's like you get your blood, then they mark it all in their computers, right? Blood checked, $500 with all the tests, The overnight stay just in the house, $10,000. It's crazy, but then you look at your bill and it's like, $200 deductible, whatever it is. So the insurer's paying all that money, you're only paying $200. But there's a disconnect there, right? How can and hospitals do great work. All the folks in the healthcare industry and stuff. I don't want to see that quality of service and stuff go away. So, when people's health is not something, as long as you have your health, everything else is. If you don't have your health, everything else is irrelevant. So I'm not trying to make it sound like I'm not in favor of that or compensation for nurses or doctors or things like that. I just find it funny they take advantage of the hot sector right now, which is GLP-1, and then it's like, all right, this is the hot sector. Let's create an article that's going to get eyes. Oh wow, pricing of the drug, that's going to get eyes. Oh, it only costs. Let's find how much it costs, and then it's like they work backwards. They create a narrative working backwards as opposed to forward. So and I use the analogy too with Tesla, right? Here's a company that's they have number one selling model. Last year, company was nothing back in there. I remember doing rants on Tesla a long time ago, but now that it's mainstream and a lot of people hate Musk, it seems like every article is just crazy stuff. So drives me nuts. Probably wasting too much time on talking about this right now. But anyway, so Turn, which I'm surprised it hasn't headed higher. UBS came out, trimmed their price target on Turn to 18 from 19, but they kept a buy rating. So, stock's at 627. It's 200% upside. And there's a lot of these analysts out with that have targets on Turn that are $14, $15, $16. The stock's at $6. At some point, whether it's some M&A over the weekend or what have you, this thing's going to take off. Same with GPCR. So that's kind of banging my head on the wall for a broken record. So then the last two pieces, one is Dell. So I was looking at Dell to trade up to that earnings gap. Then some of these AI names start to sell off, and then NVIDIA pulled and kind of pulled some of these names to the downside. SMCI, which they're all starting to bounce. So hopefully Dell starts to bounce with it. I was looking possibly to add some April 19 130s. I'll probably just wait on the sidelines of that one because I think at some point it's probably coming soon. There's going to be some kind of greed reset to kind of reset things a little bit, and which is again why I got AVGO puts. I think it was 1350 at the open. Melted, went green to red, and then it accelerated, and sure enough, the premiums go up. So by the time I get my put hedges, not only am I paying, for the move, but I'm paying for the implied the volatility spike. So the instant it started to find some footing, the premium just get destroyed. So I can't even cut the losses there. So I'll just hold on to it for now, and continue to look for opportunities to play put hedges because the market can still head higher, but I think some of these names are going to reset at some point. Small caps hitting highs here, up 1.7%. That's a good sign. That's up. Its upper Bollinger Band, but it's almost at It's almost at 2024 highs, the IWM. So that'd be a good sign heading into next week or the holiday weekend and into next week. Yeah, WW. I'm not going to say too much about WW. Besides, I'm not going to add anything until for quite some time until there's either some catalyst or it really starts to get going. I said DraftKings. They're trying to get rid of prop bets. This whole I don't know if you saw my post yesterday on Twitter. I was just trying to make fun of in light make light of the situation with this translator Ohani, however you pronounce his name, getting fired, supposedly spending $4 million or whatever on gambling, wiring money from his account. I don't know how that happens. I don't know also how the translator goes on TV a couple days prior and tells this whole story and then all of a sudden changes his story. And then supposedly if he stole the money, you would think there'd be some kind of investigations. The authorities would be alerted unless he doesn't want to press charges. But even that, it's a public story. So it all kind of reeks to me. So it's kind of funny that you have someone who actually deserves to be in the Hall of Fame, and he's not, Pete Rose. But that's an argument for a different chat room. But CGC just hit new highs. So what was my point with that? I don't even know what my point was. Oh, so DraftKings, right? So now DraftKings is looking to get rid of prop bets. You had that big article in the Wall Street Journal about this. I don't know if it was a doctor or a lawyer lost $400,000 trading, because this is what DraftKings does in FanDuel. You bet a lot of money, you get your own VIP person. They call you up, hey, I got tickets, hey, you got another credit, you deposit 500, I'm going to give you 500. That's their job, right? It's a business. This isn't, again, I say non-for-profit. DraftKings is not out there just to provide a platform for people to gamble. No, they're out to make money. And they find out the more you gamble, the odds of you losing money increase, right? And especially those higher VIP people, and that makes a majority. It's similar to what they do in the casinos, right? You always used to hear, or will still do, when Wynn used to report earnings, they always talked about the VIPs, right? Because that's the big money makers. And similar, you don't see regulars cracking down on free hotel rooms, right? For the VIPs or free comps or whatever. But that's just the world we live in, I guess. Everybody wants to control and limit and restrict and put regulations in. And I get it. I'm all about people being protected and stuff. But that's why DraftKings is down over 6% today. That coupled with the prop bets. I think that's it. Enough of my rant today. Sorry if I went on some tangents. But some things rub me the wrong way today. So I try to, sometimes good to get things off your chest, right? I'm trying to think of some other names. Restoration Hardware reports after the close. Huge implied move. And if you look at the last the last 7 earnings reports, there's been some big moves. But it's one I remember that stock used to be $30. I used to trade it, and there was a huge short interest, and nobody thought the company was going to do anything. And the CEO took a gamble on himself, raised $1 billion in debt, and just said, "I'm doing this crazy buyback and stuff." And the stock, that was it. And then the stock's been bonkers ever since. Down 13%, 14% last quarter, 15% the quarter before. Down 3% the quarter before that, down 3%. So actually the implied move right now is almost bigger than only one move over the last 9 quarters. So I'm not saying that, can't do that. But look, Williams-Sonoma had a great quarter. They have some higher scale, up-end a little bit furniture. Restoration Hardware is kind of that niche. So, interesting. Not a name I'm going to play, though. That's it, folks. About an hour and 26 minutes to the close. Let's have a great day. Rock and roll.